We have a distinguished group that will probably pound me into the ground. We have Mohamed El-Erian, Allianz Chief Economic Advisor, Kenny Polcari, Slatestone Wealth Chief Market Strategist, and the great Charles Payne, host of Making Money right here on Fabulous Fox Business. Let's see, the Dow's down 793 points, and the S&P a little over 1.5%. Go ahead, Charles. Pound me. I love you. Pound me right into the ground.
I really can't find any fault in what you said. Maybe the PE ratio, because we're almost at 19 now.
Yeah.
So, I think we'll end up trading back up to, listen, we see America, we see our economy versus all the advanced economies. We're doing much better than them. By the way, a point underscored by the action in global markets after the Iran conflict began. King dollar went up. We see demand for our treasuries. So I think we end up trading back at a 22, 23 multiple, particularly as some of these tech names rebound. Some of the software stocks, the so-called Mag 7 became the Lag 7, now the Bag 7. They'll regain some equilibrium. So I just think you're underplaying it right now, Larry. I think it's going to be better than even what you said.
Charles, you just made my day. You made my day. You made my weekend.
Thank you.
I'm going to quote you on the radio show. My Lord, it doesn't get any better than that. All right, Kenny Polcari.
Listen, I agree with everything Charles said. I agree with what you said. I think the market's a little bit overdone. But look, all the headlines are negative. Everyone you turn around, it's negative, negative, negative. We've now broken certain key technical levels on all the charts. So the algos just go into into an overrun sell mode. So the buyers just step out of the way until the market finds its level. Look, I think there are huge opportunities out there in some of the tech names, like you point out to. They're in bear market territory, down 20+%, and you're talking about really good, solid names.
Actually, from the peak.
From the peak. From the peak. Not this year, from the peak.
The S&P, to be fair, I said they're down 7% for the month for the war, but actually from the 7,000 to 50,000, they're down probably over 10%.
Yeah, well, I think at the end of tonight, I think the Dow's down a little bit over 10. I think the S&P just went over 10. Yeah. NASDAQ was over 10 last night. But I think that creates a lot of opportunity. I mean, you just look at some of the, Microsoft, for example, it's almost down 30%. It's crazy to me.
Oh. Yeah, that is crazy.
Right?
All right, Mohamed, what do you think? You're the world traveler, okay? I'm beating up on globalists today, but it's okay. We won't beat up on you. Well, how do you see it? You tell me. I know you don't agree with me, but go ahead.
So first, I would make a distinction between the journey and the destination. I agree with you on the destination. I think the journey is going to be really bumpy for markets and for the economy. And there's
getting from here to there.
From here to there.
Right.
We are crossing all sorts of tipping points in the Middle East. Damage to energy infrastructure is real, and that means that this war will have an impact. We're starting to see in the global economy not just higher oil prices, but physical shortages. And you and I know we don't have to worry about it here. We are energy independent, but in the rest of the world, we're going to see a significant slowdown. And finally, there are tipping points in the market. Today, we've seen the yen go over 160. We saw the British yield go over 5%. What happens in that world is people sell everything, as Kenny says. Right. So be ready for a really bumpy journey. I think there's already value, not in the index. That's why I disagree with you, if I may, because I think dispersion is a really important issue. I think there's massive value in tech today.
100%.
They are actually quite insulated.
Isn't tech in the index?
Index is in the index, but would I buy the whole index? No, I would buy. I would start with a few names that I feel very confident about, and as the war proceeds, I would expand it to the index.
Can I ask you a question? This is a point I hear a lot about the infrastructure. Iran bombs infrastructure, the UAE, if I'm not mistaken, and other places. But I'm also told by some people, observers, journalists, that the oil wells and the gas plants that were hit were basically obsolete, and new stuff has been built, and that was untouched, that the Iranians knew what they were doing. They made their point by taking out stuff that has not been used or not been used much, but the new stuff that's been put up was not touched. And therefore, this infrastructure argument is, I won't say it's entirely wrong, but that it's overstated.
So I think it's overstated for a country like the UAE or for Saudi Arabia. It's not overstated for Qatar. Qatar has come out and said 17% of its LNG production is damaged for the next 3 to 5 years. So again, what we
Well, sell it to them.
yeah, no,
We're gonna sell.
I mean, our energy independence is
I'm
going to
telling
make
you,
us.
Our boys are going to pump like crazy.
We will continue outperforming the rest of the world because of not only our energy independence, because we have a very dynamic private sector that adapts really quickly.
By the way, the journey part depends. I'm not a timing guy, as anybody will tell you, and my riff tonight was not a timing riff. I'm just saying this is where we're going.
Right.
And I speak to investors who, by and large, are passive investors. They're not as smart as you, they're not as smart as Charles, they're not as smart as Kenny. But Charles, I think it overlooked to some extent. First of all, longer-term inflation expectations have not moved. Short-term inflation fears have moved, but not the longer term, 5 to 10 years and longer. One point. A second point, the one big beautiful bill, the 100% depreciation, the building, the construction of factories, the boom in business capex, for example, the profitability, the improvement in productivity. We're not talking about that much anymore. Perhaps you are, I'm saying, and I try to, but in the main, we're not talking about that. All we do is talk about the Strait of Hormuz and the price of oil, but they're still there.
They're still
post-war.
there. Yeah. Deutsche Bank did a piece saying that oil would have to go to 140, 150 to totally negate all of that. We're a long way from there.
Right.
And if we got a spike, I think it would be an emotionally driven spike, from a headline, like boots on the ground to the algos, to your point. It really is just the best chart I saw this week. There's a chart from BCA. It was just absolutely phenomenal because all the charts were about taco trade and Trump and where his pain threshold is, whether it's the stock market or bond yields. This showed the Iranian ultimate outcome. And it gets back to your point. It shows their pain threshold and their ability to control the Strait of Hormuz. And as their pain goes up, their ability to control the strait goes down. Now, the collateral damage, to Mohammed's point, near term, will be global instability and economic pressure. But there's a point of no return for them. And we go to that point of no return where everyone in the world gangs up and says, listen, this is ridiculous. You're not going to hold us hostage. It would be all their neighbors in the Middle East. It will be whatever UK can get together. They may have to send over a box of slingshots. I'm not sure how the military is holding up right now. But whatever they can cobble together, it will be a united front. And this is your point. They will never, ever have this capability again.
Yeah.
You know what? Thank you. To give a lot of credit to my mentor on these subjects, General Jack Keane, who was on this show and I presume other shows and on the radio show, he has said time and time again, whether there's a deal or not, our military is going to destroy Iran's capabilities. That's the word he used. It's a fabulous word, capabilities. And it just covers everything you can imagine. The other thing, Charles, is interesting about the Strait of Hormuz is Saudi Arabia and the UAE super pissed off at Iran, throwing in with us in a very highly visible way, us meaning U.S. and Israel, right? And they don't want Iran mucking around the Persian Gulf any more than we do.
The key country there, I think, this week was Kuwait.
Yeah.
Because for years, Kuwait, was sort of, of course, until they were invaded, right? But Kuwait they put out a communique this week that just completely said, listen, Iran has gone too far. And that was like sort of the last, sometimes Qatar tries to play the little footsie, have it both ways, but they've lost all their support in the Middle East. And not only that, though, the pipelines that are being suggested for the future, these problems are problems now, but what it means, they won't be a problem in the future.
Right.
We'll never be held hostage again by the Strait. There's going to be new pipelines developed. They'll take years, but there'll be ways to stop this from happening.
That's
again.
incredibly wonderful and bullish to me.
Yeah.
I mean, the whole story, I get, the journey may be difficult. I'm trying to use your phraseology. But I'm looking at the destination. I don't think it's that far away. This is about freedom. And freedom is going to bring prosperity.
Right.
And it's going to bring it, yes, in the Middle East. It might even affect Europe if such a thing is possible. Prosperity in Europe, I don't know. But freedom, freedom is very catchy. Once it starts, those dominoes be moving the right way for a change. Look at the South American story. Look what Trump has done in Venezuela. I use that as a model because I think that's what he'd like to do in the Strait of Hormuz. I don't know that he will, but I think put the money in escrow in the Treasury, and the disbursements will be run by us for quite a few, many years. I mean, gosh, I just think people have to look through this. Now, Kenny, I mentioned the oil curve, okay? What's interesting, the 12-month is $75. The 24-month is $71.
Right.
Break even in the business, you can argue about it, but most of my friends in the oil patch think low to mid-60s. So you're closing in, right? The futures curves are closing in on the production cost. That's a good sign.
100%. And I think if this conflict ends relatively quickly, I agree with you. Oil's going to come right back down. It may be a little bit elevated from where it was prior to when we did it.
Yeah.
I think it comes down into the low 70s, just about where the futures market is saying.
So that's $30.
That's
$30
right.
bucks off 100.
And that'll take the pressure off right away.
I think that, I don't know. Mohamed, what about bond rates? Now, the 10-year has been creeping higher, okay? That's a fact. It's whatever it is now, 440.
444.
444.
We went as high as 449. We came back.
So we'll call it 4.5%.
Right.
Okay, that's up quite a bit from where it was last December or so, if I'm not mistaken. What happens to interest rates? Because the flip side of this story is another corollary that happened at the cabinet meeting. President Trump not only mentioned Jerome, he went on for quite a while, okay, about Mr. Powell and his skills or the lack thereof. And maybe even more important, the president backed his appointed U.S. attorney in the District of Columbia, our friend Jeanine Pirro, a very dear friend of mine, and former, obviously, Fox analyst. So they're sticking to their guns, and so we're worried about hashtag free Kevin Warsh. Well, in fact, the president said he may not ever have an office. You might have to give him an office in the White House. Can't do that. I know it's not independent. So bond rates up, hashtag free Kevin Warsh. Jay Powell's going to be Fed chairman for life. Oh, my God. That's not part of my, I didn't mention any of that. That's not part of my scenario, but whatever.
So the biggest move in the bond market happened at the front end. The 2-year moved aggressively.
Yes.
And it moved aggressively for two reasons. One is short-term inflation expectations have gone up. We had the University of Michigan survey today from 3.4 to 3.8.
Wasn't bad, though. The long term,
no, not at all.
And that Michigan survey was,
the long term hardly moved.
By the way, is a Democratic poll, but please continue.
And then the second thing that has happened is that now people think the Fed is not likely to cut.
Yeah.
But there was a 52% probability it may hike.
Yeah.
So you've had a complete change, which takes us to the Fed. The Fed right now is in a very tricky position because it should be proactive, not only playing offense, but playing defense. It should be very on guard against any liquidity pressures in the bond market, which we saw some of on Monday morning. Unfortunately, this is a Fed that has a very messy leadership transition that should be cleaned up. This is a Fed that lacks credibility. So I'm worried. I'm worried like you that at a time when we need our Fed to go through its leadership transition and be in the lead both on the offense and the defense, it may end up being paralyzed.
Charles, what do you think about that part of the story?
I'm concerned about Jay Powell. That last press conference, I just think he went out of his way to mention tariffs so many times. I think he was kneeling President Trump. I mean, really, it wasn't even a topic. And he must have said the word a dozen times. And also, he had an opportunity to soothe folks by acknowledging, hey, we do look through, right? The Fed looks through these events, particularly as short term. And he hinted that maybe it won't be like he didn't give the kind of confidence I thought that he should or could have, particularly at that moment in time. And it's beginning to feel personal. And so it makes you wonder what happens, because for all this talk about an independent Fed, I think Jay Powell staying on would be the greatest blow to the Federal Reserve, because it would be 100% personal. It's particularly if he says he's doing this to save the Federal Reserve or to do this and do that, because him and others who have been too vocal, politically vocal on that in the FOMC, essentially are saying that President Trump is the enemy, and that we're going to be here to go against his wishes when it's really about the wishes and hopes of the people in the nation. Right. And I think it would be listen, a brilliant chess move, by the way, on his part, saying, if you don't get rid of the investigation, I won't leave.
For his own purposes.
Yeah, but it was a good chess move on his part.
Yeah. Look, you've said, to Charles's, you've said that Jay Powell has damaged Fed independence. You've said you called for his ouster quite some time ago. I mean, but I think you're right, and I worry. I mean, I think investors would like to hear Kevin Warsh public testify at the Senate Banking Committee, but he can't do it at the moment because it's all being held up by this legal argument.
Right. I'd like to see that legal argument go away because I want to move on. I don't want this to drag out.
Are you dying to buy stocks, Kenny Polcari? That's what I want
absolutely
to know.
would be buying stocks down here.
You're buying stocks.
100% down here. But again, strategic, not just passively buy the index. To your point, you have to look at some of the names that are have gotten way mispriced because of all this nervousness. And we made some. Tech's going to be value pretty soon, right? If it's not already value now.
All right.
I think a great opportunities.
I got to get out. You're all terrific, Mohamed El-Erian. Thank you very much, Kenny Polcari. But I got to tell you, when Charles Payne said at the beginning of this segment that he agrees with me, I am going to dine out on that. I am going to dine out on that for months, as a matter of fact, because you are the best of the best.
That means I can go to restaurants around the city and get a free meal.
Anytime.
You heard what Larry said, right? Come on in.
It's so good.